Hi, very good afternoon to all of you. I'm sure we had some fantastic sessions since morning. And again, this session is a deep dive session wherein we've been talking about data since morning, leveraging data for financial innovation. We've been talking about data for governance. And now we are going deeper into a discussion where we will be talking about leveraging data specifically for lending solutions. Yeah. So to set the context, while the global fintech industry is 155 billion crores dollars and growing, while the Indian fintech industry, we see that it has the highest level of adoption at 87%. When it comes to data, I think a lot of organizations, when we talk of the entire ecosystem, 80% of the data is unstructured data. 12% of the data is what is analyzed and used. So, which means 88% of the data is wasted. Now, while this is a scenario for traditional organizations, banks, and NBFCs, we have fintechs on the other side, which tell us a story which is completely the opposite of it. And when we want to bring the entire ecosystem and we want to talk about the entire financial ecosystem, I think it's very important for us to understand how all the players can leverage data for the best of the industry. So, while we will discuss a lot in detail, I think we will start with a short introduction from all our esteemed panelists who come with a variety of backgrounds. We have a banker, we have from credit cards, we have people representing MSME, we have women World Banking representing women, and also from Grameen Foundation representing the rural segment. So I think it's a great panel, and we'll start with some short introductions. So we start with you, Arindam.
Hi, a very good afternoon to all of you. This is Arindam Dasgupta. I'm the Interim Chief Program Officer for Grameen Foundation. As we all know, Grameen Dr. Mohammed Yunus started this movement of microfinance, microcredit, and which has become a revolution and spread across the globe. We represent the India chapter of it. Specifically focusing on digital financial inclusion and creating data trail for credit evaluation.
Yeah, hi, this is Gaurav Goel. I lead the coverage for startup, fintech, and all the technology business for Yes Bank. So what bankers do with startups, we provide the technology solutions to them, all the technology rails. We do lending to the startups. And yes, we provide the normal banking solutions also as well. Blessed to work with working in this ecosystem from last 9-10 years, seen this growth journey, and part of this growth journey of around 1,000 startup as of now is a part of our portfolio in Yes Bank.
Hi, good afternoon. My name is Prithwish Ray. I'm the Chief Business Officer at Hyperface. Hyperface is, we are like a credit cards innovation platform. We work with banks, consumer finance, NBFCs, and brands. So Yes Bank, for example, is one of our esteemed clients. In short, cards and other payment form factors, how you can make it simpler, faster, and better by leveraging technology and APIs is what we do. Thanks.
Hi, good afternoon, everyone. My name is Kalpana Ajayan. I head South Asia for this organization called BusinessWorld Banking. We are a New York-based organization which is focused on women and financial inclusion. We predominantly work with large and small financial service providers. It could be a public sector bank, it could be a fintech company, it could be an insurance company. We are completely product agnostic. But what we do is to work with them to develop products, process, capacity building inputs. And we also have a small investment asset management company which invests in women-led and women-focused institutions around the world. In the fintech space, we've been doing a lot of work, especially on the algorithmic bias, and I'm going to be touching that later on when we have the conversation. But it's an exciting space for us, and we've been working with many fintechs in this country and around the world to just kind of bring in the gender focus, to the business, because we understand that it makes actually business sense to invest in women, but how to actually go about doing it, something that we work with our various partners. And it's good to be here. Thank you.
Good afternoon, everyone. My name is Sohail Khan. I lead partnerships at BharatPay. BharatPay is one of the leading digital payments and lending service providers, one of the leading fintechs in the country.
Thank you. Thank you so much. So, I remember when I launched NeoX, which is the fastest growing neobank in the country. The first issue that we wanted to resolve was how to get the right customer in. And I think that's the problem that we all want to solve for. We want to know who is the right customer. We want to get the right, no, that's okay. We want to get the right borrower in. And unlocking the right borrower is something that we want to discuss the first part of our session today. So we've talked about data. There's so much of unstructured data lying within the organizations. There's so much of data in the market related to geographies, related to demographics. There is so much of individual level data. For example, every individual that we talk of has a digital footprint. So how do we come out? So coming back to the NeoX story, how do we come out with alternate credit evaluation model, which takes into consideration all the aspects of whether a customer is using Skype or Instagram or Facebook, what is he doing, what are his activities, how old is his email ID with which he's trying to log in? Is it a 10-year-old email ID or is it an email ID which has been opened just 2 days back? Is it an email ID which says jasminebgupta@gmail.com, or maybe is it an email ID which says abcd@1234.com? So these are the checks and controls which can tell us the scores based on which can tell us whether we really want that customer in or not. And I'm sure there are other many such credit scoring models that many players in the industry have come out with. So starting the story with those models, Arindam, would you like to share some of the credit scoring models that you've been using, especially on the financial inclusion front, where we don't have digital data in a digital form necessarily in the rural or the last segment of the pyramid? So how do you use data for credit decisioning and loan evaluation? And how do you ensure that the right customers coming for yourself, for your company, and for your partner companies as well?
So first, to start off with, Grameen in India is not directly doing lending. So in Grameen, what we work at, or how we work at, is we put in a framework. We call it a DEEP framework, DEEP, which means digitization, enablement, focus on ecosystem building, and designing new products which suits this segment of customer, because the traditional way of credit appraisal, getting their KYC and getting sometimes even KIC is not possible. So before doing that, when we used to go in a traditional model, the JLG played a very important role for us. The joint liability group and the peer pressure, and everybody is individually and jointly liable. In absence of that data and all, we used to have this JLG model. But as we see more and more evolution in this space with transaction taking a digital route, and also post-COVID, there has been a phenomena where even people are not very keen to form a JLG. Right? It's more of an individual approach. Maybe the lockdown has taken a longer effect. We have learned to live as an individual instead of a group model. So there we are using, or we are proposing to use to our partners various alternative data sources. So first of all, when we say of deep, we started off with a couple of private sector banks and convinced them to do QR-based merchant acquiring in the rural market. everybody is fighting for the top layer. Today you see this fruit seller accepting GPay. Tomorrow it will be Amazon Pay stuck on that GPay sticker, or maybe Paytm. Nobody is going to the bottom of the pyramid. And we could manage to convince couple of financial institutions, couple of private sector banks to get into the rural market through the BC channel and do a merchant acquiring transaction, QR-based merchant acquiring. And to our surprise, it took off. Initially, they were also skeptic that people would not be interested. There is no penetration of smartphone, but no, there is a penetration of smartphone. Every family at least have one smartphone. So when we do a digitization of the process, of the business process, we have a transaction trail of the merchant, and also the customer that is transacting, for them also there is a transaction trail created. So we can do a business loan, we can do an individual loan as well, because we are getting that data from that network, or rather the partner is getting the data and do a credit decisioning on him. Basically, in many cases, if I tell you the real experience that we have faced in the rural market, the average interest paid by these street vendors and fruit sellers and all is 10% per day. And it's per day. It's crazy. Why? Because they are not tapped by the traditional market. And why they are not tapped? Because they do not have the data to, they do not have the documents. But now documents can be replaced with the data, right? Another thing is that traditionally we work on EMI models, or the NBFCs, the microfinance specifically brought it down to 14 days model. What if we go to daily model, EDI? That is also something that we are working with one of the partners. We are discussing with one of the partners. You see, every day this person is selling goods worth 1,500. You give him loan for 1,000 rupees, you take back 1,010 rupees. It has got a cost attached to it, of course. But that way we are trying to use these kind of mechanisms to replace the lack of documents with data and alternative data. Like if I get the location of this person, I see that every day, 10 to 5, this person is putting up his cart in this particular area. I have a traceability. Why do I need a KYC for? For that matter, my Aadhaar has the address of my native place and nobody stays there. But you are satisfied, I have my Aadhaar, I have my PAN. But we have a different way of looking at the data that we are having, not only the financial data, the alternative data source. And that's what we are trying to build in with our partners to do a credit evaluation and bring down the cost of interest and for the bottom of the pyramid people, because our objective is to have a less cost credit for the bottom of the pyramid so that they grow, and as they grow, entire economy thrives. That's it.
Thank you, Arindam. And I think for the some of the audience who may not know, the GLG model is a very successful model running in India. It's a joint liability group, and predominantly the customers are women. 90 to 95% of the joint lending model customers are women, and it is built on a social collateral, which I think now needs to move on to an information and a digital collateral.
Exactly. Bang on, Jasmine. And actually, yeah, this joint liability model initially started by Dr. Mohammed Yunus was 100% women. In India, we have not achieved that yet. In Bangladesh, he started with 100% women. Grameen Bank was entirely for women bank. And I mean, he got the Nobel Prize for inventing this model altogether. And now I think we can take one step forward, like social collateral can be from the group, can be from the social media association as well. Okay.
Thank you. And now when we are on the topic of women, now we come to you to understand your perspectives on, how, what is the work that you do for women. And when it comes to lending to women, I'm sure you are also connected with a lot of organizations who are lending to women. While MFI is one segment, I'm sure there are other fintechs, MFIs, and even NBFCs who are lending to women. So want to know your perspective on what are the new age technologies that you are partnering and using along with these companies.
No, thanks. The fact remains that I'm just going to focus on just credit as a product and women, nano, micro entrepreneurs as a segment. Globally, if you were to look at it, there was a study done by IFC, which showed actually that financial institutions were missing a $1.7 trillion opportunity by not looking at women. If you were to look at actually the percentage of women entrepreneurs globally, it's actually 1/3. So it's not a number to be sneezed at. So we do have a lot of women entrepreneurs. However, where is the problem? The opportunity size is 1.7 trillion. That's established as well. But clearly at the ground level, when it actually comes to lending, just building off of what Arindam was saying, it's a thin file customer. She doesn't have the financial footprint. So on what basis do I lend, etc. So the work that we actually do is, you'd be very surprised. A lot of the fintechs that we work with actually don't actually look at the gender as an element when it comes to decisioning. Is it a good thing? It actually is a good thing because you're not making a decision based on whether she's a woman or whether the borrower is a woman or a man. This is the work that we've done with multiple geographies. We've done this in Mexico. We did it in Colombia. We did it in India as well. It was a data.org project, which was based on actually algorithmic bias. If 92% of your portfolio consists of men borrowers, then you'd argue that the AI and ML would just build off of it. Therefore, is there an automatic bias against women simply because you don't have enough women data? So we started actually working with several organizations, and we came to the conclusion actually that they may not actually be a bias when it comes to algorithmic bias, but however, there is a bias in every stage of lending. Starting from the application, where do you go? What is the language do you use? Whom are you targeting? To, the process where, it's intimidating for the woman because it's entirely digital. Though in India, you are seeing phygital models, but she's anxious. She doesn't want to engage, and so it's not designed really for women to take on. To the disbursal process, to the collection, at every stage, there are biases, which is why there are very few women actually accessing credit in this country through formal financial means, through formal financial institutions. So how do we actually bring in this gender sensitization to the fintechs? Because it's a phenomenal opportunity. The other way to argue also is that there are fabulous business risk, right? We know women have much lower, as women as a portfolio, much lower NPA compared to men. This is proven again and again and again. But despite that, the common answer is that she doesn't have a file. How do I go about it? So we work with large institutions. We work with small institutions. We are currently doing a project, a very exciting project with SIDBI, for the Prayas program, which is entirely meant for women borrowers. And the whole premise there is that, contrary to what Arindam is saying, we actually believe that there aren't enough individual entrepreneurs coming off of the JLGs. They're more comfortable just being in the JLG, but there is a huge opportunity for individual entrepreneurs to emerge from there. But there aren't, because of various reasons, access to affordable credit being one of them, but equally the digital financial capability, because all of it is happening through. So our work with SIDBI and its partners has been in terms of enabling the digital financial capability, but at the same time designing products that are relevant for women. So this is one of the ways in which we, actually ensure that affordable capital reaches women, and more importantly, in her context, understanding her context and providing it where she wants it, because she's completely time starved as well. So how do we ensure that we reach it to her where she wants it, how she wants it? And that could be product, that could be process, that could be a whole lot of innovations happening. But that's the kind of work that we try to do.
Oh, that's fantastic. In fact, to add to that, we've also come out with our own version of women-specific only lending app, which is called Pulse Sangini, where the data that sits of 500,000 women customers is 95% women specific. And so the algorithms throw out data, which is also very, very women specific. So the pre-approved offers or the top-up loan offers or the consumer durable loan offers that we make to the women are very, very specific. And I think, as he also mentioned, that every household in India now has a smartphone. And that gives us a lot of opportunity. While women are the last customers, even in the house itself, to get access to that smartphone, I think things are changing. So great initiatives, and happy to know your views. Moving on to Suhail. Suhail, since you head partnerships business and specifically on the MSME side, can you share your perspectives on lending, MSME lending, and the use of artificial intelligence and machine learning in the MSME lending space going forward?
Yeah, sure. So there are about 63 million MSMEs in India. About less than 20% of them have access to formal credit. And this is one of the key drivers of growth for the country and the GDP as well. So I think what we've done, as part of Bharat Pay is first they getting access to digital payments, right? And as Arindam also touched upon, right, the QR enablement, even at tier 2, tier 3, tier 4 towns, right, is something which actually give them access to accept payments digitally. Second is, as majority of them have not been in the formal credit sector, so far, and this is something which has been changing right now, right? So, recently there was also a report said that there is almost a $600 billion credit gap for MSMEs, right? And about 20% of that is also towards relatively lower ticket sizes, which is less than 10 lakhs, right? So this is something which we realized as an opportunity quite a while back. So first is having access to digital payments to these MSMEs through the wide distribution, through QR deployment, through swipe machines, etc. that we did. And then of course partnered with NBFCs to give credit to these MSMEs, and that's where a lot of information and data also helped underwrite these people. So one is the transaction pattern, transaction data that they have using the QR, and also the ease through which they can do the repayment. Right? One of the things that we have seen over a period of time is that the understanding of the how credit works, what, for example, their bureau scores, have an implications. Something that was missing, quite a while back, but that has changed drastically, and that has worked well. Second is how do we also help them understand, how make them take the credit easily and the repayment part. And another point which Arindam mentioned, that in fact we were the ones who pioneered the whole EDI model, right? So we do lending to these small merchants on a daily installment, right? And that is something that has been a game changer because it is very convenient for them. They are able to through their cash flows, through the money that they collect on the QR, they're able to do it on a daily basis rather than wait for that amount to get accumulated over a month, right? So that is something which works. And with this information, access to data, etc., also helped us create the underwriting, models using machine learning, all the elements of data points that we collect to improve these whole processes, because that is something which becomes critical. That it's not about that you just give them loans. It's about how do you underwrite them, much better, assess the credit profile, in a deeper manner. And the beauty of this whole ML thing is that the more data that we collect, the model trains itself, right? And that's where it's able to improve over a period of time. So I think this is something which has worked, and this is something which is gonna be the future as well, because as again I mentioned, the credit gap is still huge. There is a lot of requirement, and there is a lot of now information availability which is there with these small medium merchants as well, right? So this is what we are focusing on, and I think this is something which has really worked for us.
Fantastic. And I think while we heard your views on the MSME sector, I think the most important thing when it comes to lending, whether it is consumers or rural or women or MSMEs, is collections. And of course, fraud management, right? So, Prithwish, want to know your views on what technologies are being used in the industry, specifically for underwriting, fraud management, and even for collections. And specifically from you, want to know your perspectives also, how it is being handled from a credit card perspective as well.
No, sure, thanks. I'll just touch upon 2 points, and almost all of us, I guess, in this room are owners of data, and to what extent I'm okay with the data being used. But just think about it who you're carding or who you're offering credit to and how, right? If you just think about the stats, and credit card is just a form factor, but if you just think about the stats, India's broadly had around 103 million credit cards, but around 40, 45, 48 million customers. So there's a huge concentration, 2 to 3 cards, perhaps people sitting here, but it's the tier 2, tier 3, which actually needs that access to credit. And cards is just a form factor. Pravina today morning was mentioning the credit line on UPI being a market making moment, right? Because how you want to give access to now here, obviously formal established data points like bureau data, like income estimation is not going to be that easily available. But the sheer availability of alternate data, big data, the choice of word is yours, is there. And I'm not going to get into, I've run credit risk portfolios across a couple of markets, but just to let you know what we do, for example, is you don't need to necessarily know my income. If you know that I'm purchasing a particular kind of apparel thrice a year, and that's a surrogate. And to your point again on collections, lending is easy, collections is tougher, right? So if you know I'm staying at a particular residence because I've ordered products from that residence for the last 2 years, you don't need to go and send someone to do what we call, in the erstwhile days, resi verification. So these are the things that are now enabling, because if you think about the client continuum, there is at one end of the spectrum, people who have all kinds of data, you don't need anything more. They are in tier 1 metros. And the other end of the spectrum, there are people who need the credit. I think point made by most of the esteemed panel members. How do you actually enable that? The second part is, what is ethical? How are you ensuring that I know my data is being used? And the third is on the experience part. Now, that's why I think technology plays a huge role. Because if you're able to get real-time access, so if it's just again, keeping names aside, if it's a co-brand credit card, for example, with a large retailer, and I apply and I stay in tier 3, you don't necessarily need to hold back the application. You just need to ping through an API and find out if I'm, at that residence for the last 1 year. And there you tick the resistability. You just need to find out if my purchase value, is X or is it X minus alpha, and you get an estimation of my affluence or my ability to pay. So those are the ways in which through, credit access, and now of course with line on UPI, it just opens up the whole spectrum, because we all know the stats. And again, it's going to actually enable more credit, perhaps where it needs to go and is much desired. That's the way I look at it.
Fantastic. And to add to that, I think, Gaurav, you can add to what Prithwish just mentioned. As a banker, you've been dealing with most of the fintechs and startups. So what are the innovations that you see around? What do you think is the future of credit on UPI, and your perspectives on financial inclusion?
Thanks, Jasmine. Thank you. And very interesting what Sohail and our other panelists have shared. So I'll say that is basically transforming the banks. Actually, banks are the biggest generator of data. Every second, huge amount of data is getting generated with the banks. So it is completely transforming banks from, simple brick and mortar institutions to a data-driven financial institutions. And again, this data is expanding the scope of banking. Banks were not able to reach to various segments like a gig economy worker, or say the micro credit requirements of bottom of the pyramid, or maybe the MSMEs. Say when we par Bharat Pay, the daily EMI, so that's banks never thought about it. Or maybe when we work with Hyperface and see how credit collection data is generated by them. So this is how it is it's data is expanding the scope of banking. Now, we can earlier there was a very templated solutions we had, but now it's a very hyper customized solutions we give to maybe a teenager. There's a specific solution provided by the banks or the financial institutions, or a gig economy worker. They were never part of the credit scoring earlier, but now with the various data points through the alternate scoring mechanisms, we can provide credit to those segments. Even teenagers we can do, even housewives like Kalpana is sharing, because data is gender agnostic. It's all about the information and then the credit scoring. So it has tremendously enhanced the scope of banking, and then the credit which banks were not able to deliver to the lower segments of the pyramid. But now with the getting that data, you can understand the needs of those segments, then you tailor the products according to their requirement. You can deliver in a very, very cost effective manner. Otherwise, the delivery was very costly earlier. And the last part of it, the customer service after the delivery of the product, because of data and the technology, it has become cost effective and can be delivered in a commercially viable manner. So that's how I would say it has completely transforming the banking and making us deliver our objective of reaching to the masses in a more efficient way. I'll pause.
Yeah, of course. And I think data and the new technology that we see is not just is has impacted all the aspects of the lending function, starting from onboarding to underwriting to fraud management to collections, disbursements. I think everything. A lot of players have played a part. Of course, the digital public infrastructure, which got us the JAM network, which has of course, played an important role and supported the digital KYC and the digital disbursements. I think this is one time after COVID where we see 100% digital disbursements. So I think the entire journey, the entire lending journey has gone digitalized, and I think of course there are more newer innovations that we expect as we move forward. I'm sure any one of you would want to share any closing lines. Otherwise, we would open the room for questions.
I just
by
had
the
one point to
audience.
add. I mean, data existed perhaps even earlier. It's how you can leverage technology to use that data in a ethical and meaningful manner is what is actually the driving force. Because a lot of this data, of course, the JAM you alluded to that has enabled, right? I mean, there are enough and more country level or macro level stuff which has happened. It's how you can now use technology and deliver the ethical way, make it simpler, faster, and better is perhaps what is the driving mantra.
Yeah, perfectly. And I think how you use the technology, you rightly mentioned. So, for example, chatbots earlier used to be considered only as service and engagement tools. You can service the customer well, you can ask him what is going wrong and all. But now that we also see use cases emerging wherein chatbots are used for underwriting itself. Yeah, because if a field person is going to the customer and asking X number of questions, why can't your chatbot do it and analyze the data and do the same thing? So there are, I think, newer use cases emerging. Yes, Arindam, you want to add to that?
Yeah, exactly. So basically, what data usage is doing is democratizing the credit overall. So the left outs are being included in the fold. We are becoming more inclusive, and data has the power to include all of them. And we need to ensure that nobody is left out or left behind because of documentation. And at the same time, from the other side, the lenders would also probably love to see that they're broad basing and hedging the risk. Data is used as a risk hedging tool. As you go on increasing your customer base, you're actually potentially perhaps cutting down on double credit, triple credit, and all those stuff, over leveraging the income. Because so far we have been within a very narrow mind space where we are lending to one person, maybe like Prithwish said, that maybe we have everybody in this room has 3 or 4 credit cards. So it's actually over leveraging.
Absolutely. In fact, Gaurav's point was equally valid. People say low and grow is a strategy. You give a 5,000 rupees line, to Kalpana's point, gender aside, I've personally seen in markets, including India and a couple of other ASEAN markets, women portfolio, everything aside, rank orders better in terms of performance. But even if I leave the gender aside, if you give me a 5,000 rupees line and I've never had credit access, you observe me for 6 months and then you give me a credit card or whatever for 20,000. So that's the way, you grow, but you grow in the segment where you've tested.
Just one point that, we all agree that data is all out there, right? But I think the one piece probably that we're missing, and we're just seeing this beginning, to play out in large institutions which deal with data. Everybody's looking at approved data. Are we looking at the reject data? And there's that's a story in itself, and so you don't need to, the cost of acquisition of data and customers, as we know, is phenomenal, right? But we are very easy to reject the data. Could we therefore just go back and just look at the reject data? And we've done some work on this, on the reject inference. And it's very interesting to see that's a gold mine too. if you understand the reasons why you've rejected, and if you have a better risk appetite to your points in terms of, wanting to maybe, test a couple of products, niche products with niche customer segments, I think, the opportunity size there is phenomenal as well.
Perfectly. And I think what we also are doing here is analyzing the data of customers who have been rejected, and also the customers who have very, very poor credit rating scores, and enabling them to improve their credit scores. I think it's an entire business model in itself, getting customers move up on their credit scoring model. And like he mentioned, one customer, Gen Z, using 3 or 4 credit cards, used up all the credit cards, and then of course the credit score was pathetic. Didn't know, was using one credit card for paying up another, and it was a vicious cycle. So helping that individual out to ensure how he can improve his credit score, because it is new learning for him. He's a new credit customer for us. So I think getting that right is, again, a different business model. And I think lots of fintechs are working in that space. With that, our time's up. Thank you, panelists, for sharing your perspectives. I think we had various diversified perspectives on this panel. And in case we have a few questions, we can take them.